On the 25th of April, we held our inaugural Investor Summit in conjunction with NYU Stern's Business School.
We bring together the most eminent thinkers, the best of academia, politicians, and investors to debate critical issues that we face in society.
I think the big issues for gold over the next 20 or 30 years are going to be some of these structural changes, trade and technology and politics. These are all going to be big issues for precious metals and gold in particular.
I think it's really important for Stern and the World Gold Council to look at long-term investment challenges, what the solutions to them might be, and what the implications for financial markets and for gold as an investment might be.
Central banks have now begun to reinvest in gold again. They see it as a diversifier, and it also as a hedge against the risk of government debt.
In the future, I think that there are two qualifying features of gold which could be of interest for any long-term institutional investor: high liquidity and high returns. That's the magic asset class for sovereign wealth funds.
You know what's interesting is gold is still significant. I ask myself if it's a relic of a long history, why is there $1 trillion held in gold by the world's central banks, plus the IMF and all of the other financial institutions? If it's worthless and meaningless, why is everybody still holding it? And the answer is that the general price level in terms of gold is still back where it was. In other words, the change in the price of gold is equal to the change in the price of commodities, or the general price level, which tells you that there's something about gold. I've thought about this for a number of years, and I reach a blank. It's almost as though, technically speaking, the ability of having a stable price has great value. And I think that's where the biggest issue has been as to why gold, as a practical matter, was kept in essentially throughout the world. Why was gold so cherished around the world before people even met one another? I mean, it's a sort of quasi-mystical. I don't know what the answer is. I've been struggling with this for decades. But I do know that it's kept a reasonably stable position with respect to goods and services.
Investors really should take both short-term and long-term factors into account when they formulate their investment strategy. And I think they should develop a strategy and stick with it. If they see risks out there on the horizon, particularly long-term risks that may not affect them right away, then they should look for ways to insure against those risks, what we call insure against long-term tail risks.
The trends that we are observing are very interesting. First of all, sovereign wealth funds are embracing long-term investment into the future drivers of growth. And that's why we are seeing so many investments, for instance, in IT, in technological disruption. The second one is that sovereign wealth fund has been gradually shifting their investments from fixed income towards equity. So much more risk in their portfolio, but also more unlisted targets and more illiquid investments. Third, and finally, we are observing a dramatic shift and increase in partnership. So no more solo investments, but strategic alliances with private equity firms, infrastructure specialists, real estate firms in direct co-investments.
There will be more demand from the consumers from their diversification needs. There will be more demand from institutional investors. It's going to happen gradually in China, India, those less developed countries. I think that's a major undertone of this event.
There's very few conferences out there that really focus on long-term investing, incorporating and thinking about how gold fits into sort of the investment environment.
We got to hear from pension fund managers, sovereign wealth fund managers, we heard from academics. They all said the same thing. We need to know more about gold, we need to understand gold. And so I think that's the opportunity for the World Gold Council. It's fit for purpose for educating the market on gold, and we're going to take those steps.